Does buying a car at the end of the month actually save you the most money? How about when your credit's pulled? Does that really hurt your credit score? In this video, I'm going to share with you the biggest myths in the car business that people believe when they're shopping for a car that actually hinder you from getting a good deal. I'm going to talk about the most triggering myth that I hear every single day for my entire life of the car business, and that is that credit pulls hurt your score. This is 100% false, and I tell you, I hear it every single day, and people truly believe that this hurts their score. So much that someone says, well, I had my credit pulled last week and I've lost a few points. No, you did not lose a few points. I promise you 100%. Fair Isaac's reporting agency, FICO, the ones that make your credit score, they tell you that 35% of your credit score is your payment history. 30% of your credit score is amounts that you owe to your lenders. 15% is the length of your credit history. 10% is new credit, and 10% is a credit mix. Where in that ratio that adds up to 100 shows credit inquiries? It doesn't. They changed this in 2005. 2005, that's a long time ago that they changed this. So this used to be true, but it's not anymore, because it is unfair to you or me that if we are shopping to get credit, that we are hindered or we are punished by getting our credit pulled so that we can save money. That is unfair, and they realized that back in 2005. So the very first myth that is completely false is that your credit score is hurt when you get your inquiries on your credit report. Now, if you go out and do 100 inquiries, the likelihood of you getting approved is going to be very low, because the banks do not know if you have acquired new debt. And if your debt to income is close or anything like that, they're gonna put the reason on there that there's too many inquiries. And that's a legitimate reason to get declined, but it does not hurt your score. So if you are out car shopping in a 30-day window, all of those inquiries that are pulled, if it's 2, 3, 5, 10, it all counts as one pull, and it does not hurt your score. The second myth is probably the most controversial myth out there, and that's buying direct from the manufacturer is actually the way to save money. And you can go out to any forum, Facebook, anything like that, and just bring that up just a little bit, and everyone will be like, yep, we need to eliminate dealerships. Well, let me tell you, that's not the route to go, and it's definitely not going to save you any money, because buying direct from the manufacturer might seem like the way to cut out the middleman and save money, but in reality, it often doesn't benefit the consumer. Manufacturers will set prices to maintain certain profit margins, and without the dealership competition, there's no one pushing prices lower through negotiations or incentives. Instead of passing savings on to you, the manufacturers will keep the extra profit for themselves. Plus, dealerships often offer perks like trade-ins and finance options and personalized service that you won't get buying direct. In the end, the only one really saving money is the manufacturer, not you. So imagine this. Tesla's the biggest elephant in the room here. I watch this stuff on a daily basis. Tesla's not gonna want your non-Tesla trade-in. Say you have a Ford, a Chevy, a Honda, Toyota, whatever the case may be, go look at Tesla's website. There ain't none of those on their website. It's only used Teslas for sale. So they have to have an exit strategy when it comes to your non-Tesla trade-in. I see Tesla, I see Rivian, I see all these manufacturer direct sales processes. Their cars are being sold at auctions. The auctions are the lowest retail value of your car. So therefore, they're gonna give you the lowest. Now you're like, well, I'll just sell my car on my own and get more money. Well, you lose your tax credit in most states, so you're losing money there. 2, you have to put in a lot of time and effort in to sell your car. This is not an easy gig. If you have an expensive car, then you're gonna wanna have people try to drive it, which are they covered by insurance or not? And then you have to worry about can they get financed if they're going to finance, and then most importantly, you have fraud as well. There's so many cases of fraud, but one that's going on right now in my home state is that there's a dealership being mimicked on the internet by scammers, and people have literally sent this dealership, who's got 5-star reviews, they've sent them $40,000 and they've gotten scammed. And this has been going on for some months. And those cars are listed on Carfax, CarGurus, and AutoTrader. It's absolutely insane. Not to mention, imagine talking about financing and that manufacturer says, nope, we're not gonna take any money from you unless it is true wire transfer or 2, you finance with our bank, right? They have that option to do so. So they may not have the best interest rates. So then you have to go refinance down the road, but they put all sorts of stipulations on their financing things. So there's always something crazy out there, not to mention the amount of people these manufacturers and dealerships, most importantly, employ, make a big impact on the local community. So don't think that buying direct from the manufacturer is a way to save money. It's only going to cost you. Number 3 is end of the month savings. So many people out there talk about buying at the end of the month is the best strategy. That may or may not be the case depending on the manufacturer. Some manufacturers give dealers fast start bonuses at the beginning of the month, because if they can give a good foundation to the beginning of the month, then the rest of the month it goes through. There's an old saying in the car business, the best time to sell a car is when? Right after you sold one, because your motivation is high, your ego is high, and you're proud of yourself. So you go out there and you start doing the right thing. So these manufacturers know this as well. And so they sometimes will reward fast start bonuses for their dealers. Not every manufacturer is the same, but it's something that I've seen out there that you probably are not aware of, that you should be. End of the month may help with incentives as well. So dealerships will tell you, well, hey, our incentive ends tomorrow, it ends on Monday, whatever the case may be. You need to know that throughout the entire history of my career, when you look at incentives, they may fluctuate, but it's only about $500 in savings. And again, with over 10,000 cars sold in my career, the best time to get the most incentives is during the car show in your local area. So if your geographical area does have a car show and there's some incentives by the manufacturer, I promise you 100% that is the best time to buy the car, because they are spending a lot of money in that area to do so. So end of the month may not be the best time to buy a car. You can definitely use it as a strategy, and it's, of course, that's being pushed heavily by anybody who wants to be an influencer on social media. And sometimes they have hidden agendas, like they're a brokering service, which is illegal in most states, but they still do it because they call it a buying service. But it is illegal to do that. They're pitching that so that way they can say, hey, I know when the best time of the month is to buy, and I'll do all the legwork for you. So end of the month is not always tried and true, but it is a big myth out there that people think that that's the best time to buy a car. Number 4 is about getting pre-approved is the best. Sometimes getting pre-approved is a good strategy, but it's not the best strategy. And a lot of times people out there will tell you, always get pre-approved before going in. Now, it's a good strategy to do, but it's not best. So a lot of times what happens when you get pre-approved, that bank may not know all the situation of what you're buying car. So let's talk about LTV, loan to value. A lot of banks will say, yep, you can buy anything you want. You can buy up to $35,000, you can buy up to $20,000. But what they don't know is that you have a trade-in. And once you go find your car and you have a trade-in, you have a bill of sale from the dealership, that pre-approval may not be working for that particular bank. And then you're like, well, I'm done now and I've wasted my time. So getting pre-approved is good. It's a good negotiating tactic, get the best rates, but you got to worry about and ask your bank when you do get pre-approved of what their underwriting guidelines are. A lot of times they are mileage restrictions, year restrictions, where the dealership is restrictions, and of course, like I just talked about, loan to value. Other restrictions may be that bank is going to give a letter of credit, which is just an IOU. You can't go buy a Coke at Walmart on an IOU. What makes you think you can buy a car on an IOU? It doesn't work, and a lot of times dealerships won't take a letter of credit for payment. They have to take a cashier's check, so make sure that happens as well. Number 5 is credit score alone gets you approved, and that's so far false that I couldn't even begin to show you all the examples that I've seen out there. So with all of us having something like a Credit Karma or other credit reporting agency apps on our phone, you think, hey, I got a 750 credit score, so that means that I'm instantly approved and I can go buy whatever I want. It's not true at all. In 2010, the way the banks loan you money on cars is now called risk-based financing. So back in the day, I literally had this conversation with the bank, it was US Bank at the time. They had a quick approval that if you had 3 trade lines and you had an XYZ credit score, that they could buy whatever they want. I was working at a Cadillac store at the time, so I said, wait a second, if I have a 19-year-old kid that comes in here and he's got 3 $300 credit cards and he's been in the credit bureau system for all your guidelines and makes all this requirements, that I can just quick credit him and he can buy a $60,000 Cadillac Escalade? And the guy looked at me and says, yep, that's true. I was shocked. That is not the case anymore. That is nowhere even remotely true nowadays. If I walk in with an 800 credit score and you walk in with an 800 credit score, we could get drastically different interest rates on the same car. These banks look at everything now. They look at credit score, obviously. They look at the depth of your credit file. They look at past history of car loans, how much you borrowed, stuff like that. For example, when I went to borrow my money on my C8, I was borrowing over $100,000, and I had a little bit of problems getting approved because I've never borrowed $100,000 on a car before, but I had an 800 credit score. So I had a little bit of work to do to get approved on that car loan. So it all matters based off of risk based on what the banks do, and every bank has a different algorithm and their lending guidelines do it. So the best thing I can tell you is if you have never had a car loan or a mortgage, 1, have a cosigner, 2, have big money down. Just because you have a 720 credit score doesn't mean you're getting approved. And number 6, I always love to give you guys just a little bit more than what the title suggests. So the freebie of this one is that all cars that were sold at auction are bad. I hear this over and over and over again, and that's simply just not the case. Where there are certainly bad cars at auction, not all cars sold at auction, because every dealership, especially franchise dealerships, have a different selling model of what they want to do, a matrix of the cars that they sell. So let's take, for example, Tesla. I mentioned that earlier. They're not selling any Fords or Chevys on their website, so they're going to send those to auction. There's a dealership in Lexington, Kentucky that on their website states that they only sell black, white, and silver cars under 80,000 miles. So if they trade for a red one, primarily that's probably going to auction because it's not their selling matrix. So not every car sold at auction is a bad car, but you definitely need to do your due diligence to ensure that you're not buying a bad used car.